Wall Street Bets, Reddit, GameStop, short squeezes, AMC, so much drama. But you know what? We now have some data, and it's very interesting data, and it's data that I agree with and I think actually is telling the true story. Full disclosure on my part, I got a lot of this wrong. I went down and I don't even know if the media knew what was going on, but I did go down the route of, it's the little guy versus the big guy. And it's, wow, the little guy is really, sticking it to the big guy. And it's not looking like that's what actually happened. Now, did the little guy play a role in it? Absolutely. I'm not refuting that. But the data is suggesting that, I don't know if it was as big as a role as what it was made, out to be. And in my opinion, the little guy, the retail trader definitely knocked over that first domino, kind of lit that first little match. But then as the data suggests, there is a lot of other dynamics at play here. And we also have, more data that is just confirming this. So as we're recording of this, it's Monday, and this will come out on a Wednesday. So, but we've got a couple more days of data, and I kind of like this because maybe this will come out, and you'll be able to say, Clay, look what's happened to GameStop since Monday, since you did this video. You got it wrong. And you know what? So be it. I like it. I liked being held accountable, and we'll have to see what happens with it. But like I said, when you look at the data from what we'll go through in this article that you see on your screen, and then I go over what's happened with GameStop over the past couple of days, I think it does a good job of illustrating just across the board what's been going on with a lot of these stocks. So right here you can see, and this is CNBC, so it's I guess I didn't. This is coming from CNBC here, but as you see here, GameStop mania may not have been the retail trader rebellion it was perceived to be, data shows. So what is this data? Well, the first bit that I found interesting was a look at the top 10 most purchased stocks by retail traders during the market mania last month is missing one key stock, GameStop. So literally the 10 most purchased stocks is GameStop. Now, I'm going to stop you right there. Well, Clay, that's because Robinhood and a lot of other brokers restricted it. And you're not wrong. And to be fair, this article addresses that. However, a lot of this data is coming from before Robinhood and other brokers ever actually restricted buying on it. But I think if we're both being intellectually honest with ourselves, that is kind of strange. Top 10 most purchased stocks, and GameStop wasn't even one of them. Of retail stocks, that is. Like I said, I don't know. To me, that doesn't quite add up. That doesn't quite make sense. So you can see right here, they go over, the 10 stocks most bought by white. That was a poor choice of colors. But right here, you can see the 10 stocks most bought by retail investors in January. And you got, the typical names. You got, the Teslas and the Apple. Of course, PLUG, that thing's been a classic forever. Verizon, Coca-Cola. Again, if I'm being intellectually honest, I would not have guessed those ones would have been on the list. I can see General Motors with the EV stuff they've been announcing. And then, of course, there's AMC. So that would make sense. But, GameStop was not on this list. So then as it goes on, the prevailing narrative was that a band of Reddit-inspired small traders rose up against Wall Street by buying GameStop en masse, forcing a short squeeze by professional hedge fund managers who were forced to cover the negative bets or risk catastrophic losses. But several signs are pointing to institutional investors as big drivers of the wild price action on the way up. And let me set up a little context and just throw a book recommendation out there. And whether you like the guy or not, Jim Cramer, Confessions of the Street Addict, fantastic book, really good book. I've read the thing like 3 times. In fact, I'll put a link down below if you want to go check it out. But in that book, and for those, maybe you never even heard of Jim Cramer, former hedge fund manager. But in the book, he talks about how hedge funds, they are out for blood. They are out to crush one another. And if they smell blood in the water, they will go and try to crush that other firm. Why? How does it benefit them to crush another firm? Well, crushing another firm crushing another hedge fund means that those people that invested into that hedge fund are going to have negative returns. And they're going to be like, well, this hedge fund manager is terrible. They're losing my money. I want my money back so that I can go put it someplace else. Well, what hedge fund has been having good returns? Well, when you're crushing other hedge funds, that's going to make your returns look even better. So, you know what? I'm going to go with that hedge fund, right? This is not rocket science on why a hedge fund would be motivated to go out there and crush another hedge fund. And like I said, if you read that book, there's all sorts of stories in it. And one of those stories is, and he explains how if hedge funds know that certain things are going on from the short side and that they can cause some sort of squeeze, cause some sort of pain, then they will try to do that. So that's why I said at the beginning of the video, in my mind, yeah, retail probably played a role in just getting that first domino to go over. But then as data, as you're about to see here, suggests, it was more so that other hedge funds that came piling in that ultimately created that big short squeeze. And again, I'm going to end this showing kind of what retail has been apparently trying to do and has failed miserably at it twice now. But so like I said, hedge funds, they are out to crush one another. And then you see this data. Again, that first bit we already saw. As far as retail trading, not even in the top 10. But then you look down here, and as it goes on to say, although retail buying was portrayed as the main driver of the extreme price rally experienced in some stocks, the actual picture may be much more nuanced. JP Morgan Global Quantitative and Derivative Strategy Analyst Peng Chang told clients in a note, JP Morgan's quant team uses public data from exchanges and applies it to proprietary methodology to identify which flows are from retail traders. GameStop was number 15 on the firm's retail buying list. Okay, this is coming. I mean, these are like the geekiest of geeks, right? The quad or the quants, right? They are just doing quantitative analysis. I mean, these guys swim in numbers. They sleep with pocket protectors in. I mean, they are the geek upon geeks. And what are they saying? For them, was number 15 on the firm's retail buying list. The rookie investor Villantes grabbed the most attention by being all over social media, posting screenshots of their positions and crucifying Robinhood and other brokers when the firms were forced to limit trading in the high-flying names. The membership of Reddit group WallStreetBets has rocketed to 8.5 million subscribers. However, it's possible the noise from this crowd caused most to overlook Wall Street co-opting this trade to make a fast buck as well, as the data shows. So down here, you can see that they were actually, get this, and this is what I found fascinating, retail investors were net sellers of GameStop. Now, last week refers to the week previous when all the big crazy price movement was going on. Net sellers. And I will put a link down in the article down below too, so you can go in and you can look at these figures more if you want. But I mean, you look at this and you can see that when, you know, the way that the graph here is set up, there were more people selling than buying from the retail trading perspective, which doesn't make any sense, right? Because the narrative, what I thought, what a lot of other people around the media thought was, wow, you have all these retail traders, they're all coming in, they're all buying, they're all forcing these hedge funds to have to buy, and oh, wow, it's just so much buying. But that's literally not what happened. Net sellers. There was more selling than buying going on. And I don't say that in a negative way. I say it in a smart way. I'm actually glad to hear that retail traders were like, wow, I'm up a lot of money right now. Sell. Good. I'm happy. I mean, I get it. Once again, the narrative is diamond hands, right? You have all these Reddit people, diamond hands. But like a lot in life and a lot in not just, I mean, it can be politics and anything. A few voices on social media can sure come across as a whole lot of voices and create this overall narrative that doesn't actually exist, aka this diamond hands thing. Sorry for all of you that thinking, you know, a lot of people have diamond hands. Net sellers. That's not diamond hands. What is it? I think they call it paper hands, right? So knowing all that, this makes a whole lot of sense. What was going on in the stocks forced the hedge funds to trade to cover, or they might have been playing to win, said Piper Sandler analyst Richard Repetto. And then this is what I think is happening, especially when you just kind of understand the business, understand incentives, right? Hey, if I crush that firm, I have a potential to get their customers and increase my fund. There always could be the hedge fund that was totally uninvolved, wasn't short, but saw what was going on and said, this might be a way that I can profit just by going long. right? And that's what a lot of people are, hey, buy the squeeze, buy the breakout, buy whatever you want to call it. I mean, it's not like hedge funds just stood there and watched the entire time. And now this is where things really start to add up in my mind is, this retail trading flows dropped off amid GameStop mania, to which, like I said, makes a lot of sense. Retail trading volumes were near record highs at 50% on Tuesday of last week. Again, last week being during the week of when all this was going on, which would make sense, right? Craziness is going on. It's all supposed to be retail. So yeah, record highs, but dropped off more than 5% the next day, signaling a decrease in individual investing in what was the thick of the Reddit mania. And that you want to think, wait a second, it dropped when all this momentum, all this, little guy sticking to the big guy, it actually dropped. If this was retail trading doing everything, that percentage would have stayed the same, if not gone up. Said Repeto, I think that Repeto, I'm sorry if I'm mispronouncing your name. Hedge funds might have been riding the wave and trying to benefit too. Might have. I think they probably were trying to ride the wave, especially when you know that riding the wave is forcing a short squeeze, which is killing your competition, which are highly leveraged on the short side. I think that's a fair summary. Now, to be fair, trading restrictions by brokers like Robinhood and Interactive Brokers on certain securities started Thursday of last week and could have contributed to the drop in trading that day and last Friday, to which I agree. But, let's just look at the trend here. Like I said, reached the 50% mark, and then next day and the next several days continue to drop and drop. Now, right here, to be fair again, that you could easily say, and I think it's a valid conclusion, well, that's because a lot of retail got restricted. So yeah, absolutely. But the point here being, before this part even happened, the trend was already going down, which doesn't make a whole lot of sense that if retail was just punching and punching and punching, like I said, in my mind, and the way I look at the data, it doesn't seem like retail was really as strong as what it actually was. Literally, net sellers. So you have net sellers, you have combined that with the fact that GameStop wasn't even in the top 10 retail stocks that were bought. Then you have this where you have the flows actually decreasing before the restrictions even happened again. And I'm bummed out about this, but maybe, just maybe, that it wasn't as much as the small guy as what we were led to believe. And then I also want to point out this, because this is the real world data that I'm seeing that aligns perfectly with this. So what we're looking at here is the technical chart here from GME. And like I said, I think it illustrates what we were just seeing, and it just matches up. And because, again, I really understand, and it's a good counter point is, well, yes, Clay, of course it appeared that retail wasn't doing all this because of the restriction and all that, which, again, good point. But also last week, restrictions started to come off. And today, restrictions, as far as I know, we're totally back to normal. So when restrictions started to come back off, logic would dictate, all right, retail, let's go. And to be fair, and this is what I think, and I talked about this in a video I did last week, but I think this is very telling. This was Friday morning, opening 30 minutes. Basically the first time restrictions all done, and retail showed up. I firmly believe that this was retail, and kaboom, there it went. Opened up down in the mid 50s, went up as high during that first 30 minutes to basically 85, and then started the next 30 minutes, got up as high as, let's just call it 95. And then look what happened. Nothing. Everything just fizzled out, and down, down, down it went. And my theory, what in my mind is, yeah, retail, it packed a punch, but it was a very short-lived punch, no pun intended, and it's not looking like any hedge funds got involved in this. And because no hedge funds were getting involved, no big money, no other outside money was coming in, down it went. That matches up perfectly. This was, in my mind, and I was thinking on Friday, hey, you know what? Maybe retail is back. Maybe this is going to be the second round haymaker that is the next talking point across the markets. And I was really like, okay, here we go. It makes sense why this 30-minute candle, it makes sense why Friday morning was so powerful. Restrictions are gone. That's no longer an excuse. Everybody can buy again, diamond hands, all that sort of stuff. Let's see what happens. And it lasted for all of about 45 minutes, and things just fizzled. And then we look at today, again, Monday. Things started off looking good. In fact, the price actually had a gap up, meaning for those of you that are new, Friday, the price closed right there. This morning, the price opened up there. So that movement right there is known as a gap up. Again, that's a sign of bullishness. That's a sign of, people are buying. But then look what happened. What we would be known in trading jargon known as a gap and trap. Market opened up and just fizzled right out and down it's gone. So it's looking like there just is not any sort of actual strength. There's not any sort of follow through these movements. Once again, I'm putting myself out there. I'm recording. I'm talking about all this on Monday. It's going to be coming out on a Wednesday. Who knows? Maybe this chart is going to just go kaboom back to the upside, and I'm going to be sitting here looking like a moron. Won't be the first time. But like I said, I'm putting it out there, and I'm just giving my thoughts. You don't have to agree with them, but looking at the data and then seeing, the data that actually matters, right? The real-time data in terms of, what's the price actually doing? And the price made a couple bullish movements. Friday, big move up, fizzled. This morning, Monday, nice move up with a gap up, totally fizzled back out. So it's looking like the hedge funds are kind of done with it. The party's happened. All the craziness has happened. They've, some hedge funds have been crushed or been severely depleted. And now it's just a matter of, you know what? I think we got some new customers because we crushed some of these other hedge funds. Their returns are not looking so good. Their investors, that put money into the hedge fund are not very happy. Mission accomplished. Let's go see what else is out there. And now it's just left retail all alone. And retail all alone, again, that movement right there was respectable, but totally fizzled out. And then that move right there, was even worse. It gapped and trapped. So we'll see what happens with it moving forward. But that's the article. That's the data. Like I said, I know I didn't go through the entire article, but I'll put that link down below. And I'm curious your thoughts. Feel free to leave those down below. Maybe I'm looking at some bit of data wrong. Maybe you disagree. And that's cool. That's why I like doing these videos because for the most part, people are constructive in their criticism. People want to have an honest intellectual conversation. Some people would be like, Clay, you're an idiot. Okay, well, thanks. Thanks for the constructive thoughts there. That was very intelligent. But like I said, I'm just throwing it out there. Maybe I'm missing some things. Again, I could be totally wrong. On Wednesday when this comes out, maybe GameStop is at like $1,000. I don't know. But from what the data I've seen and from what the price action and how it's behaving, I don't think that's going to happen. I think the game, no pun intended, is officially over. And I think if anything, retail needs to actually come together. And I talked about this in past videos. I think retail, they're dividing. They're like out there trying to force squeeze on 15 different stocks. In theory, if all of retail came together and focused on one stock, then I think there could be some real possibilities. But I think, retail traders, they're just spread across too many stocks. What was it? It was supposed to be GameStop and AMC and Silver and NAKD and BB. What is that? BlackBerry and Bed Bath and Beyond and SNDL. There's like 18,000 stocks out there that were supposed to be the next short squeeze. And, it's just, and again, it's all mapping out. It's like, okay, well, yeah, you look at all the data and then you factor in that everybody's just kind of spreading themselves thin. And unfortunately, I'm not quite sure that the whole little guy narrative, punching it to the big guy narrative, was as true as what it is made out to be. I hope I'm wrong. I hope it actually was. But, seeing this data and then seeing the price movement of GameStop, it's just not looking like retail was maybe as strong as what everybody was led to believe, especially, again, when you go to during all the mayhem. Retail was net sellers. There was more sellers than buyers going on. That's crazy. I would have never have thought that would have been the statistic in data, but it is what it is. So like I said, let me know your thoughts down below. I appreciate it. And also, if you enjoy these videos where I kind of take articles or just current events and talk about and give you my thoughts, let me know in the comment section or just hit the like button. That's the easy way to communicate that to me. If I know that there are interest in more of these current event videos, I'll keep doing them. But if not, then I'll just kind of go back to the normal videos. But I want to at least experiment a little bit and see your thoughts on that. So definitely let me know down in the comment section below. And yeah, thanks for hanging out. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.